All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Been an interesting morning in the market. Talked earlier about the really heavy volumes that have come in. We saw some kind of real heavy bottom volume yesterday after the Fed. And we talked about that and kind of what that is. It's a process, not an event in most cases. And sometimes we hit a new low with slightly lower volume before snapping on back. And this morning, you can see, we get the 40-point sell-off in the market that's kind of become normal. And then we get this volume patch right here of 20K marking this next level. And you'll notice that this level right here is lower than yesterday's level. The volume is lower. And that tends to be what we see when the market is putting in a little bit of a bottom or a stock itself is putting in a bottom. That's the type of action that is fairly typical. Now, I have to repeat this. I've said this before, but bottom doesn't necessarily mean going up, right? And those are two very different things and two very different elements that exist out there. And for me, one of the things that would kind of be a little bit of confirmation of, hey, going up is to break some of these reaction highs that we've seen in the last 24 hours here in the market. And we're not really even close to those yet. Right? We're really not close to those yet. A lot of the rebound that we have seen here in the market, a lot of the stocks kind of holding up, have been utilities, which were down and have rebounded pretty substantially, pretty sizably here. We see consumer staples rebounding a little bit, but nowhere near the way utilities are. And let's face it, from an option standpoint, utilities are a little bit tougher to trade with the spreads and everything else with them. But we see utilities pushing on higher. Banks are holding on today. The XLF, it's holding on, but it's not exactly doing anything that would, give you some sort of comfortable feeling that you're not just trying to pick a bottom. Right, there with the banks, and a few spots in tech holding up okay. But again, nothing that would make you feel, all comfy that, hey, you know what, bottom's in and off things go. And what's remarkable about things like Apple, it's been, for the last 2-3 weeks, we haven't seen it close above the prior day's high at all. And, we continue to see that happening with the market and with most of the stocks in the market where they're struggling to close above the prior day's highs, in general here. The VXX, I've been watching this today. I mentioned I was watching it this morning and, looking for an entry point. Really haven't found one. And it's one where the option values aren't very good. In fact, they're quite pricey. I mean, the 76% implied volatility on those, it's just normally the IV on these is pretty high, but 76%. In fact, for a lot of stocks out there, we are talking about 52-week highs in implied volatility, meaning option valuation or just the pure option expensiveness is at a new all-time high or new 52-week high. And for some stocks, we're talking about a multi-year high in that valuation here. So, you have that to contend with, with things out there. But market, down about 30 points here. And, we see that secondary volume element coming in, which is, if you're bullish, you want to see that. But still not a real change in the market internals. No real shift there that you can say, oh well, boom, okay, money's going to start flowing into these markets. The bulls still have oversold, and that's about it. And then, a little bit of positive divergence in terms of international markets. We've talked about the FXI, the EEM, where, they don't only have positive divergence in the short run, but in the longer run too. The performance metrics are just remarkable. In fact, here's the EEM. the emerging market ETF, and if we just track this performance over the last 30 days with the S&P, the emerging market ETF is outperforming by almost 6% in the last 30 days. That is a huge number. And I know, the talk out there, sky's falling, sky's falling. Yet emerging markets are, basically flat for the last 30 days. We're not seeing, that skyfall element that we typically will see when the market is dropping. Now, it can easily be argued, well, the emerging markets, they dropped ahead of all of this. They weren't exactly making new highs while the S&P and the Dow were up near their highs, right? So, it is commonplace for the emerging markets to be leaders, not laggards. But, we're still, the EM still below the 7-day moving average, still below the 20-day moving average. Not exactly in a position where you can look at it and say, oh, well, I'm convinced it's going to go higher from here. It's just outperforming, here a little bit on the day. So I haven't jumped into a trade, and really not a whole lot that I look at and I go, wow, this is really compelling and really interesting. Some of these stocks like Caterpillar have a lot of put options being traded on them today. But one of the things that we will tend to see is when the market is ready for a bounce, we see a lot of put options come in because investors will go out, buy the puts, and then go buy the shares over the coming days. And those puts are basically protection. I don't see the level of put buying being all that high to suggest that it's happening en masse, but we do see it happening within a few names here. But anyway, it's similar type of market here. Very, very expensive options, and it is trying to showing some signs in terms of the volumes of some potential bottoming action here in play. One thing I do expect is that we will see another 40, 50 points worth of movement today. We will have another big up, big down type of element here. And I do think today's close is important, and maybe more important in terms of where does the market, when and where does the market kind of push above this 25-20 level. But it's one where so far just nothing even all that close. All right, thanks for hopping on. We'll talk to you later. Take care.